Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today I have Van Carlson on the line, and he's founder and CEO of SRA 831B Admin. Van, welcome to the show.
Yeah, thanks for having me on, Adam. Appreciate it.
All right, Van, so we got a lot to talk about today. So, of course, I wanted to get into what your company's up to and really how small businesses can strategically use an 831B plan to prepare for and recover from natural disasters. So we'll get into that and more. But before we do, I just want to know, how did you get into this business? Where did this start for you?
I was a traditional insurance agent. I sold the property and casualty insurance leading up to '08. During the Great Recession, it became apparent there had to be a smarter, better way to manage the overall financial risk business owners took. I was helping them manage their risk, insuring their buildings, their commercial auto, making sure they had the right coverages and all those types of things. But the financial risks that they were taking every year, that was one thing I was not focused on. And I was aware of the 831B tax code, which basically the tax code gives advantages for self-insuring risk. Until you really get hit upside the head with the Great Recession, like it was back in '08, '09, you don't account for all the financial risk you take to run a business until sometimes it's too late. And then, of course, fast forward to COVID was another great example of why business owners today need to be more self-reliant on themselves. As business owners are typically their own best investment, but how do we protect that investment? How do we protect that business? We utilize tax-deferred dollars and utilizing the tax code called 831B. That's really what we admin. I mean, we're an administrator of these plans, no different than a 401k administrator would be for your retirement plans.
Yeah. Let's go a little bit further into this. First off, explain maybe a little bit more clearly what 831B is, just for those that haven't heard of it.
Yeah, you bet. Unfortunately, it's been around for almost 40 years, so it's unfortunate, but a lot of business owners still are not aware of this. But it really is a way, we call it an unfunded liability on your book. And what I mean by that is if I have a liability on my books and if I can fund it through a premium and transfer that risk to a traditional insurance company, I'll do that, right? So a good example would be a building coverage, right? If I could get fire, theft, vandalism, wind, hail, smoke, and all that stuff covered under an insurance policy, I'll transfer that risk, pay a premium, and I've funded that liability I would receive on my business. And then there's certain risks that you just cannot simply transfer to. A lot of those, I would tell you, that are much more complicated than they are today than ever before. And of course, we have the hardening of the traditional insurance markets where the burden is falling more and more to the business owner, meaning you're paying more in premium, but you're getting less in coverages. And that's across the board that we're seeing in the United States, and for that matter around the world. But it's just getting to be a really tough place to be right now, especially when you talk about catastrophic losses. You're taking on more first dollar risk. You got co-insurance clauses now. These things weren't even there 10 years ago. And then you put on top of supply chain risk, you put on top of business interruption, very similar to the PPP plans, and then the supply chain risk, the cyber, third-party business interruptions that are all rampant today where, my stuff's all up in the clouds now. 10 years ago, we had a paper file to fall back on if that's what we needed. We don't have that today, right? You're relying on those third parties. So there's a ton of risks that business owners that are retaining on their books. And then how do you want to fund it? You want to use pre-tax dollars or after-tax dollars? And if you want to use after-tax dollars, that just means you're going to need line of credit. You're going to potentially loan money back to your operating company, or you're going to take money out of your cash flow. Or you can use pre-tax dollars, and these are dollars that you would have just simply sent off to Uncle Sam, but now you can take a deduction still at your operating company level and then fund it to an 831B. And the 831B, all that is where it exists in the tax code. And like I said, it's been around for almost 40 years. Obviously, the first adapters to these were very large companies that had to go self-insure risk because nobody's willing to sell them even general liability policy or product liability. These are large publicly traded companies that own a lot of their own insurance companies. What we wanted to do after '08, '09 was bring it down from a price point where all business owners ought to be able to look at least at some point in time as they achieve to a certain level financially and the company itself grows, that they need to start looking at self-insuring risk in a much more favorable way than just taking it or being reliant on the government to bail you out like the PPP programs and the ERC programs were during COVID. And that's one of the things I would tell you, Adam, that, if you were relying on those programs back then to keep you, and you still own a business because of it, what are you doing differently today? And if you're not doing something differently today, then are you just going to rely on the government the next time? I don't know if we can or should we, honestly. And so that's really where the conversations have gone with our business owners is know that it's out there. It's a legitimate tax code. It's been around for a long time. Sorry you're just now hearing about it for the first time. But, like everything else, it's another tool in a toolbox. And at the right time, it's a heck of a tool. for sure.
So let's do a little bit of myth busting or addressing some of the common misconceptions that business owners maybe have about 831B plans, especially when it comes to disaster recoveries. Like, how do you address these concerns and maybe bring out some of these myths for us?
Yeah, you bet. I think one of the big one is the IRS doesn't like these things. They are obviously a benefit to the taxpayer, right? You're expensing it, but you still have the money at the end of the day, right? To be able to, that rainy day fund, war chest, whatever you want to call it, where, if they brought back, for example, accelerated depreciation again, right? So all that means is I'm buying a piece of equipment, I'm taking a full depreciation, but I financed it. And that gets back to my 0809 debacle, where I just saw a lot of business owners do all that because that's the only tax planning they really knew. And they just kept betting every year was going to be better than the next year. I don't like accelerated depreciation, but nevertheless, it's back in the tax bill now. But anyway, so I digress a little bit on that, I guess. But I would say that the biggest thing for me is on the myth part of it is, even though the IRS doesn't like these things, doesn't mean you're guaranteed an audit, doesn't mean that, of course, they're downplaying the risk and everything else. And honestly, the CPA community out there, there's a lot of CPAs out there who are just trying to figure out, the tax returns. They're not really doing great tax planning, in my opinion. And at the same time, do they even know about the 831B tax code? So there's a lot of things out there. I would say this. You have to have a distribution of risk, which means you will never own 100% of your own risk and call yourself an insurance company. There has to be this pooled risk out there. And I think that's one of the things that business owners need to understand, that, hey, even though I may not have a claim, the pools I'm attached to may have claims, and I'm going to share in that. Now, some people say, well, that's too much risk or whatever. I don't think it is, the way we calculate the risk and manage the risk. But more importantly, I think it also goes to the point that these are business owners that are having claims that they could not buy insurance for. Yeah. And now they're on a lifeline, literally. I mean, we deal with it almost weekly at this point, where business owners are having claims, and they are just thankful they've done our program. And yeah, okay, I'm going to have to share in this risk, but, I'm helping another business owner out too, though, right? Or I can just give my money to the government and hope they know what to go out there and do something with it, right? You have direct impact with business owners that are having, brand protection issues, cyber issues, the things I've talked about, right? Dispute resolutions, employer issues. I mean, I can go on and on about the risks that we identify that you're self-insuring for, and how do we wrap a policy around that, and how do we manage the risk more effectively and efficiently, and utilizing the pre-tax dollars. And, these are tools that are, like I said, the big boys get to run them all day long. What I'm more worried about are where my clients were when I was selling traditional insurance. They weren't Fortune 500 companies by no means. These were risk takers, entrepreneurs, family-ran businesses, great partnerships, and they had a great idea and they ran with it and turned it into a profitable company. Or they're the local plumber that runs a really good business, and those are our clients. I wanted to make sure it was affordable for them to do it, at least an opportunity for them to look at doing it, and not have fees be so egregious that they wouldn't even look at it because the fees were so high back in 08, 09. The fees were ridiculous. All those fees have compressed with competition. That's what happens, right? So again, I think business owners, hey, there's bad actors in every industry. You're back in the day when you did 401k, you almost guaranteed yourself an audit, And I say, based on the fact that we've been doing this since 2008, our clients don't get audited because they own 831Bs. By no means. That's never happened. With ours, we've gone through a promoter audit with the IRS. There's good actors out there too, I guess is what I'm saying. And you owe it to yourself. You owe it to your business that you've ran, the business you own, you operated, the employees you help support, to look at all tools that are available to you. And this is just one more tool. And I think you got to do your own due diligence. You got to really understand it, and you got to trust who you're doing business with. And, I would tell you this, that we have more conversations today, taxes aside, it's risk management. Business owners are finding themselves more and more, either they're hard to get coverage. If they do have coverage, they're worried about turning the claim in because they know somebody else in their peer group, for example, turned a claim in and now they can't find insurance, or it doubled in price. And then it's like, why am I even turning these claims in? I mean, these are and then you talk the co-insurances that are going on, especially on the coastal areas. I got hail damage issues going on in the Midwest. Property coverages are not going replacement anymore. It's mostly going actual cash value minus depreciation. If you got a commercial building over 20 years old now, most of it's ACV, meaning that to replace that building, you're only going to get what the building's appreciated for at the time. And meanwhile, I got to replace it due to a fire or the roof blew off of it. Now I got to replace the roof, but they're only going to give me actual cash value minus depreciation. I'm so underinsured at that point. Am I going to be able to stay in business? And meanwhile, can I build up these tax-deferred dollars over the next couple of years and be able to weather that storm much more favorable because I've been diligent? Adam, I would say this is a forced savings plan. And you still get the deductions because government puts a ton of incentive in our tax codes, as you know. This is the only one I know of where you can still take the deduction and save the money and have access to those dollars when, God forbid, that might be the only dollars you have access to. And that's just straight up good risk management.
I'm curious, what size of companies is this typically appropriate for? Is there a certain, is it by employee count? Is it by revenue? Is it by industry? What do you see? Yeah, I'm sure it goes pretty broad, but what do you see?
I'd say gross revenues, honestly. And into, what it comes down to, honestly, is the owner. Where's the owner at? Is the owner so busy that he's running around with his head cut off and he's still wearing all the hats? You're not ready for this type of program. I would say the type of clients that we see mostly are people that are working on the business, not in the business. So they've achieved a certain level from a financial standpoint, from a market leader in their space they're in, either in their community or whatever they're doing in their industry. And they're looking at different ways to diffuse risk, where a lot of business owners, especially in the beginning, it's pedal down and risk aside, I got to go. You know what I mean? So it really depends on where the business owners are at in their business. If they're looking to start to sell, this is a great program for that, to start to honor some of the rep and warranty issues that we deal with when we look at merger and acquisitions. And then also just where you're at financially, I think, is another big one. Are you putting every dollar back into your company? And if you're not, now how are you protecting that nest egg? How are you protecting the cash flow? Because our program is really designed to protect the cash flow of the business. Probably the most valuable thing business owners value is the cash flow, right? That's why we do what we do, right? And how do we manage that? And so I would say from a perspective of a dollar amount, it's not as clear as it used to be, because some of these companies make unbelievable margin on a very low gross number. And then some of them are making large gross numbers, but they're only making 2, 3, 4% on that revenue, right? So it really depends on, diving into them and into the risk profiles, looking at their policies, seeing their, the problem today is, you're paying the same amount of premium or more, but you don't know that the policies change. You don't know you've got exclusions in there now that you thought you had 5 years ago, which you did have 5 years ago, but now they're excluded or they're limited. That's really where your agent needs to come in and really do a full-on assessment. Now we do that through our underwriting team. We'll take your policies in, we'll underwrite them, we'll look at them, and come back with you some recommendations. Hey, are you? And you know what? 9 times out of 10, the clients aren't even aware that they don't have this coverage anymore. That's what insurance companies have done, Adam. Is you can only charge so much premium, and the public's like, hey, I call no mercy here. I can't even afford this anymore. Or what do? You charge the same premium, but you've just taken some frequency losses out of there. So you've taken some exclusions in there that you put in there that, hey, we're not even going to cover that next year. Now, that's not taking on the front side, that doesn't appear to be taking a rate increase, but absolutely it's a rate increase. If we lower their exposure down for claims, the insurance companies, that's taking a rate increase on you because you don't have that coverage anymore. Right? So there's a lot of ways that game gets played, unfortunately. And I get where the insurance company's at today, honestly. It's not the LA fires right now, a lot of that stuff's not even shaken out, but that will be the one-time largest loss in the history of our country. And that's saying a mouthful when you think about it. It will be one loss that we would occur over a year's period of time. We will experience it on one loss. And that's not even shown itself yet. It will be interesting to see what happens with some of those issues. The reinsurance markets are coming back in line right now, it seems like. So we're hoping that they have more risk for really insuring the stuff they used to insure a handful of years ago, especially on the coastal properties. I deal with a lot of clients down in Florida, California, the Carolinas, where they just simply can't even get insurance on their commercial buildings right now. Or if they can, it's going to be a pittance of what they really need for coverage. And so there's a lot of things going on in that space that, again, we do a full risk assessment. We don't charge for that. And we'll come back and make recommendations. I have a very robust underwriting team. That's what we are. We're risk managers first and foremost. We're not the CPAs. We're not the attorneys. We hire those people. Most of our competitors are CPAs and attorneys when they look at managing these types of plans. And what I think makes us unique in space is we're risk managers first, and we approach the risk first. The taxes are second. And I think that's kept us out of trouble for the most part. At the same time, hopefully differentiate ourselves in the market as well.
Amazing. Well, I'll tell you, it's smart what you're doing, and I'm a big fan of adding more options for business owners, especially when you're taking advantage of a code that's been out there, like you said, 40 years, 40 plus years. So it's nothing new, but it's knowledge. It's knowledge. And for those, for a lot of businesses out there, this is going to make sense, but they need more knowledge, and they obviously are going to have a discussion, connect with your team, and evaluate whether or not it makes sense for their companies. Van, how do people follow up? How do they learn more? How do they connect with you and your team?
Yeah, I think the best place is start at our website, 831b.com. There's a thing in there that you can fill in. Do I qualify? Is the time right now for you? And then, too, there's some case studies in there you can request for. And then there's also some videos in there you can just watch, conceptually what it's designed to do for you. And then they're always happy to reach out to me, Van at 831b.com as well. That's Van with a V, not a D. And no, I'm happy to, address them. And like I said, we work with trusted advisors all over the country as well. We got a great referral base. If the clients want to talk to other clients, especially in their own industry and how they're utilizing these types of plans, we're happy to provide all that stuff to them. And hey, man, I'm here. I love business owners. There's the true risk takers left in our country. And the more we can help mitigate the risk, hopefully, we have a thing here at SRA called We Embolden Business Owners Through Innovation of Risk Management. And that's true, I think. If we can position dollars in a way that makes clients feel more at ease, and hopefully the risk takers, the good entrepreneur, the people that can make things happen, maybe that does make them want to go take more risk down the road. And that's what we need. We need people that are willing to take risk. At the same time, how do they manage it on the back end? And I think we play a great role in that ability to do that.
Amazing. For everybody listening, just so you know, we'll definitely put some information in the show notes so that you can click on the links and head right on over and connect with Van and his team. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. Each and every day we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way in your journey as well. So again, hit that subscribe or follow button. And Van, thanks again for coming on the show.
Hey, thank you, Adam. Appreciate it.